Hello, everyone. Good evening, everybody. Good evening. How are you? How is everybody doing tonight? We just sent the link, so we have to wait for a while for everyone to join us. So, in the meantime, how was your weekend? Did everyone had a good rest? Or if you're still enjoying your weekends? Jones Legam said, "Hey, Cham, is this Gilles?" No, I'm Theo. Gilles is on the support. I'm Theo. My name is Theo Theodorou. Sounds very Greek Cypriot name. So, where are you guys watching us from? Come on, let's bring the energy a little bit up. And trust me, that tonight's webinar, it's going to be a very, very, very insightful because the market last week revealed some good trends, and this week it's about to reveal even more. So finally, we're going to experience some insane volatility so we can take advantage of some strong moves. I see many people are joining us tonight, and this is fantastic. So let me know, where are you watching us from, guys? Let's not take more than a couple of minutes, and we are ready to start. There are still people joining, so I try to wait for 30 seconds, 1 minute. John says, "Hello, Theo. I'm a big fan of you guys. I'm from Denmark. Just finished gym. Nice. But what time is it? It's over there." And it's Sunday and you are working out. Fantastic. So, Bozidan said, "I have a question. I want to start trading on my own. I open my TradingView account, but I don't know what broker to use. Any recommendations? Shout from Serbia." Fantastic. Bozidan, just send us a message at support, and that's Gio's area, and Gio's will guide you and direct you on exactly what you need to do. Okay, let me just help with that. And okay, I took a note. Isaiah, yeah, Isaiah from United Kingdom, Zoom user from United Kingdom, Anna from London, Ruth from Finland, welcome, Jane from Finland, fantastic. It's okay, we have 1 hour different. Nick said, "Hello, Theo from UK." Hello, Nick. Isaac said, "I'm a big fan. I am from Nigeria." Fantastic. It's our pleasure to have you here, and of course, everyone else. MRIA, have you heard about Ever Horizon? I'm from Latvia. Trust me, I visited Latvia 7 times. I think so. And now in my house, there are 2 Latvians. So, Marine said, "Croatia, fantastic." Vladimir from Georgia, Vincent from Spain. We have Vilius from Lithuania. Brilliant, brilliant. Ermin said, "Hello, Jones. By the way, how my DNA is Nigerian." Fantastic. Ernie from Slovenia. Punit said, "Hello." I think I sound like that Eurovision guy, or that he said 12 points to Slovenia, 12 points to, anyway. Okay, from India, fantastic. So, guys, let's get started. So, it's a privilege and honor to have everyone here on this webinar, and myself, and of course, all of our Elevating Forex team. We are excited to have you here. So, our disclaimer, just to ensure that this is not considered as a personal advice or financial advice, and it's for training and educating purposes. Now, for those who don't know who am I, my name is Theo Theodorou, and as for my expertise and experience in the markets, I'm a certified financial technical market analyst and a certified market technician. I hold certifications from the Society of Technical Analysis in the UK, as well as from the International Federation of Technical Analysis. I have more than 10 years experience in trading. I love trading currencies. I prefer it over equities. On a daily basis, I deliver market analysis for hedge funds, for trading firms, for prop firms, for individual traders. And I also create educational courses for trading as well as investing. I publish articles in financial magazines like Financial Magnets, for example. That was the latest one. And I did webinars with Steve Nimson, John Bollinger, who invented the Bollinger Band. Steve Nimson is the guy who introduced us to the candlestick patterns. If you heard about any candlestick pattern, we know because of that gentleman, and many, many others. So let's dive into today's market. Guys, today it's the first time I will start with the gold market, okay? Because at least those who are that's your second webinar or more, okay, and you are not for first time with us, we explained last time about this. That's the weekly chart, okay? Now, how I do these webinars. First, I give you strategies and I give you structure. Now, because I want this information to be relevant throughout the week, the only way to achieve that and equip you with weekly information that you can trade throughout the week is to understand what's going on the weekly chart. And then if you want to trade yourself on the 4-hour time frame or 1-hour time frame, 30 minutes time frame, it's totally up to you. But my main goal here is to ensure that you are trading with a strong force in the market. Not all the currency pairs every week are tradable based on this strategy, but it's the only strategy to ensure that if you're going to trade, you're going to have high probability of success. If you have any questions, please type them on the chat box below. Okay, now, and let's make it clear to everyone. This webinar, it doesn't have any purpose to sell you any program. We don't sell programs here. We don't mix anything in these webinars, okay? We are purely here to give you the market knowledge to equip you for the week if you want and if you decide to trade yourself beside our signal, the traders they send every single day, okay? Now, some of you, they choose to take personal coaching with me on one-on-one. That's a different story, okay? But that's not the purpose of this webinar. If you need some specialized knowledge and you refer to me, it's something else, okay? So don't think that we do this webinar to do anything beside knowledge. Guys, is that clear? Does everyone understand this? I don't want you to have a second thought about the webinars, okay? I want to be firm and crystal clear. This webinar is purely for free and it's purely for you. So, bearish engulfing candle occurred. I hope you can all see my screen, right? Yeah. Bearish engulfing candle last week occurred at an all-time high at this resistance. What did we say? We said that next week, it means from Monday to Friday that it already passed, we were looking to go short on this one. Then I drilled down on the 4-hour time frame and we marked this bearish engulfing order block. Now, after we identify the direction and we know that we want to be seller, we have to find a way to enter the market. Now, on the order blocks, for example, are a great way to enter the market, okay? Or at least it's a good area of supply and demand to start looking for areas where to enter the market. Now, how to execute the market, it's going to be purely based on price action setup. Now, the first thing is selection. The second thing is going down to the 4-hour or 1-hour time frame. You can write this down and you can apply this, okay? The third thing is to enter. Where are you going to, how to enter, where are you going to put your stop loss, where are you going to put your take profit, okay? We want to enter from areas that they have high probability if the price is going to move in the direction to be spot on, okay, and ride the wave. So at this point here, if the price we set, it's gonna stop and reverse somewhere in this order block, we are fine to either take a trade on the 4-hour chart, on the 1-hour chart. Even if I wouldn't go to the 30-minute chart because it needs a little bit more analysis throughout the day, but on the 4-hour and 1-hour time frame will have been enough. And there were two opportunities. The first opportunity was on Wednesday with this inside, double, triple, quadruple inside candles. The break of this one, it was like a spring, and the break occurred to the downside because the trend primarily is down, and it helped with the setup. Okay, now we target the previous swing low when we go short. If you are new to trading and you don't understand these candlesticks and the order blocks, but I have to help you to understand them. But in this webinar, I cannot spend 30 minutes out of the 45 minutes or 50 minutes only to explain one thing and not do the market analysis, unless it's something maybe you can request. You can send us something at support request, and Giles will collect all the information, and maybe we can put webinars to educate you. I will do the webinars to educate you on this type of price action, to become a sniper, to take price action trades that they have the highest probability of success. Okay, so the one trade was here and the other trade was here, but that was on the hourly chart, and it was this kind of bearish engulfing candle or dark cloud cover. And what happened on Friday? Entry here or entry there during the New York trading session, the stop loss above there, the entry down here, and take profit here. Okay, these were the two trades that were worth taking. Okay, now what we expect from next week. Now, why I wanted to show that trade, guys, it's because it's good also to understand how would you have applied that information. Okay, now after a bearish engulfing, if the market doesn't follow through and it doesn't sell off very aggressively, it means that it lacks momentum. It lacks the momentum. So because the currencies, they move based on primarily they're going to move based on the fundamental side. Okay, this week it's going to be the non-farm payrolls. For those who don't know what is non-farm payrolls, you can Google that. Non-farm payrolls refers to it's one of the biggest events happening in the US. It happens once a month. It's always the first Friday of each calendar month, unless this Friday happens to be the first day of the month. And the traders, they are looking to capitalize on the price. But often this event brings much of market direction. Okay, so also there are going to be interest rates from the European Central Bank and from the Bank of Canada, BOC. Both of them, they are looking to reduce, to drop their interest rates. So the most important thing to keep from this information is if the interest rates will drop, the currencies, most likely they're going to get weak. That's the most important information you need. Okay, how can we use that information to trade the gold? Well, the gold here is traded against the US dollar. So if the non-farm payrolls on Friday, they become positive, and actually this most likely we're going to see a drop on the gold. Okay, because this is XAU USD or XUA USD, whatever it is. So if the US dollar will increase, the gold, it's going to drop down. It means the direction of this, it's going to drop. Okay, so that's in a nutshell for the new guys and girls here. What do we expect to happen? Two things. If the price will drop from the 4-hour time frame now, here is the box. You can draw the box. If the price will move outside of this box towards the south, oh, let me draw it for you here. Why it doesn't come? So if the price will break to the downside, then we're going to look to, again, look for the price to move down, come upwards, and at this point area, maybe we take some trade shorts. Okay, we have to see based on the daily price move. Guys, do you understand what am I saying here? Is that clear? You can use the chat and say yes, no, maybe, something, yes. Okay, good, good, good. Thank you, thank you. Try to, as much as possible, to engage with the webinar so I understand how we progress while we are moving forward. Next one. But on the other hand, if the price will break outside of this box, then we're going to look for the retracement. Prices, they go up and then they're going to come down, and we're going to look to take some trade if the market stops and reverse, and we go long from here. Okay, so we're going to use this box as our reference from next week onward. Next one, let's check the euro against the US dollar. Another very interesting market. So what's going on with the euro on the weekly chart? Last week, you saw that we had that inside hanging man, and we commented that usually this price action here, it's a reversal price action, and we expect the market to go short. So on the 4-hour chart, on the hourly time frame, did we have any price action or any opportunities that we could take advantage of that? And the answer, it was yes. And for me, it was only on Tuesday with this one here. Okay, because that was the area we marked as resistance. The price was somewhere here, I think on Friday. It moved upwards. On Tuesday, it rejected here. And on the hourly time frame, it's also very visible. It dropped down. Take profit was down there. Okay, when we trade on the 4-hour or hourly time frame, I personally like to stretch it out until the next area of support or swing if I'm going short. Okay. So from this week, because the market stayed, as you see here, as another dodgy candle in decision, I want to see the price to break outside, either to the upside or to the downside, out of these areas here. If we name this as the resistance, and this is going to be our support. That's a weekly support. So if the price on the 4-hour chart breaks, let me zoom out a little bit. So here it is. Price breaks above this resistance, we're going to start looking to go long. If it breaks under the support, we're going to start looking for short position. For as long as the price remains, and here it's got traders, they get it wrong and they get a bunch of losing trades. For as long as price remains within a support and resistance in a trading range, the longer the trading range holds, the more dangerous becomes for the trader. Why? Because a mature trading range, it's going to break at some point either to the upside or to the downside. Now, what's the problem if it starts bouncing around the resistance and support? The problem is that the breakout, we don't know from which point it's going to occur. And that leads with many of losing trades by the traders. Now, if a trader start trading from here, it sees that, okay, I'm going to go short, and then the price put a stop loss above there or above here, and the price move like this and comes down. Again, the price still trades within the range, but in the essence of we are not able to take solid trades and high probability trade. So after we identify the trading range and after 2 or 3, maximum 3 touches, then we better wait for the breakout either to the upside or to the downside. If it's going to be to the downside, let the price move away from the trading range. And I'm telling you, and take it as a very, very much solid knowledge. Wait for the price to move away from the trading range. At some point, it's going to bounce upwards, it's going to move upwards, and it's going to give you the entry you want to continue trade the trend. Okay, and from experience, the highest probability trading comes if you are trying to trade with the trends and not against the trend. Nothing wrong to take reversals, absolutely fine, as long as you know how to trade reversals, okay, for more experienced traders. Question here from D. If it goes up, then US dollar is weak and XAU goes up. Yes, that's correct. That's correct, D. You're talking about the gold. Next one, Great British Pound. That was another trading setup we should have take, okay, or you should have take if you were watching this webinar last week. On the weekly chart, the price, see this one, guys. We said last week, these were the weekly candles, okay? So the price made higher highs here. Now, we said pound was very strong and we are looking for more push to the upside, further push to the upside. On the 4-hour time frame, and I told you that will be one of the analysis I was sending out to a hedge fund and a prop firm on Sunday night, and I did. And I had this order block here that I put it for you as well. And I told you, if the price enter into this order block, and it happened, I think it was Thursday, and you see a reversal price action, don't hesitate, take the trade. And we had marked the weekly high up here. So the entry came after the bullish engulfing with a stop loss that was 20 pips, and the take profit, it was about 35 pips. Okay, it was a take, many people, they took this one. And I gave you that setup. If we said if it's going to happen, and it happened, because the time we were doing the webinar, the price was right there. Okay, we didn't know. Maybe the price will come here and just penetrate and move to the downside, but it stopped, it reversed with the same price action. So if you were watching that chart, you will have taken that trade, in my opinion. Okay, next one, US dollar against the Japanese yen. So Japanese yen was a weak currency despite the strong CPI numbers in Japan. But what is happening is that the market is in an uptrend. The market moves upward. Okay, so if the market is in an uptrend and you are trading on the 4-hour chart, on the hourly time frame, it's more, I encourage you to look for long positions. Okay, if you're going to trade on the 1-minute chart or 5-minute chart, for example, when I trade the indices, the US indices during the New York trading session, and I trade 1-minute chart and 5-minute chart sometimes, I don't look the weekly chart. Okay, I look only the 30-minute chart and the hourly time frame. So, but when I trade, for example, the US oil, I always refer to the weekly chart because I enter on the hourly time. Okay, so it's, but now I cannot give you a 30 minutes time frame market analysis and you expect that it's going to be relevant for Wednesday. That's why I do it on the weekly chart, because I want you to have something. Okay, unless if you decide to go a step further and master trading, then you need a little bit more knowledge. That's a different story. So the price makes higher highs and higher lows. We see that this is the all-time high. Price last week stayed up to that point there. So what do we expect from next week? Definitely we want the price to break outside of this consolidation. All right, we want the price either to break to the upside or to go for the reversal if the retracement, sorry, if the retracement will occur and the price will break under this one and start moving lower. I believe it's going to come up to here because that's the lowest reference point. So mark this area, guys. Please put it on your chart. maybe the price will come here and it's going to bounce. It's going to show a reversal price action. It's going to bounce off. And with a reversal price action, it can move upwards. We can take trades within this range. Okay. If the price comes here around 154, 153, 500, and maybe we can take some trade. Also, on the way down from this point here, maybe we can find also some waves and trade them. Okay, so let's mark this also on the chart. So that's a support. If you want, you can use different colors for support, and you can use different colors for resistance. And that's a resistance, for example. Guys, any questions so far? Next one, Australian dollar, US dollar, pretty much same behavior with the euro. On this one here, it was a little bit hard to take trades, to be honest, for me, because the price was an inside here. It was right at this support, and I was saying that, okay, maybe the price is going to find support and bounce off and move upwards here. It was a bit tricky, okay, for me. But again, the fact that the price was at this support, it will have lead us to look for long opportunities around the support. The support was down here. Okay, so from next week, what am I waiting to happen? Same with the euro. We want the price to move away from this support as well as this resistance. And if the price is going to break to the upside, here we have another resistance to work. It's a little bit more complicated, to be honest, this one here, because of this resistance, and then 20 pips above, there is another resistance, or 30 pips above. So it doesn't leave us that much of room. Okay, guys. Question came from Surojit. Hi, sorry, I missed some of the webinar. That's okay. What's your analysis on gold? Will it bounce back, or it's going to go down further? Honestly, if I knew that answer, trust me, I would have put everything I own in my life on that single trade. And no stop loss, of course. High leverage, 500 to 1, everything only, no stop loss. What's going to happen? I don't know, but I believe, based on the technical analysis, that the gold, it's going to go sideways until the non-farm payrolls, unless something will change during the week. Okay, but and all the majors, they have that tendency, guys, the first week of every calendar month to go sideways until that non-farm payrolls outcome report, and then they just take the direction during the New York trading session, and from the upcoming Monday they start just moving in their direction. So, but again, it's going to be interesting for the major currencies this week. And yeah, last week we weren't very active with this, but this week I think we will be. So next one, let's check the USD Swiss. Swiss franc was one of the most, one of the best currencies, to be honest, last week. Where is the weekly chart? So on the weekly chart, we said that last week we were expecting the price to continue moving upwards, but hello, 1, 2. Can you guys hear me? Someone says no audio, but I think from my end, everything is fine. Yes. Let me just put a message on the group. Audio is fine, everyone. Everyone can hear. Okay. Okay. So we thank you guys. Thanks for the response. But on the other hand, we said that the price is at resistance. And guys, trust me, after 12 years of trading experience in all time frames, in markets like emergency markets, like major, minors, exotic, everything, when the price is at resistance, don't get triggered and don't get emotionally by the price action that tapped the resistance. Okay, the price action that tapped the resistance and stopped there, write this down. Most of the times it misleads the traders and they think that, because it touched the resistance, regardless that it didn't penetrate, didn't close above, it stopped there, and next period, next day, next week, next 5 minutes, next 15 minutes, whatever is the time frame, the next period, the candle will penetrate the resistance. Well, this happens and can happen, but most of the times this doesn't happen. Okay, so write this down. You see the price at resistance, regardless of price action reversal or not, you be patient. The resistance most of the times force the price to go in the opposite direction. That's why we call it resistance. We don't know yet. If we don't have a confirmation immediately, we have to wait. We can go to a different time frame. That's why we have the privilege of time frames, to go and check things on different time frames. And on this one here, at this resistance, what happened on the 4-hour chart, there were multiple opportunities. The price from Monday, that was Monday, it started getting rejected. It moved and break this structure here, and it moved downwards. It retraced back upwards. It gave this bearish engulfing, then it gave another bearish engulfing. Both of them, they were tradable opportunities. Okay, so if you were trying to take this bearish engulfing here or that bearish engulfing there, in both cases, stop loss should have been placed somewhere above the swing highs. Okay, and the trade will have been closed somewhere here where we had that that old line, whatever, it's been there for ages, to be honest, but it's relevant. Or you just look on the left and you see, let's say, this order block here, and you say, okay, I'm going to put it there. If you have put it there, then okay, maybe you are still in the trade, I don't know. But anyhow, you get the message, you understand how you have to approach and perceive this market information. Okay, next one, USD Canadian dollar. Where are you hiding, USD CAD? USD Canadian dollar, here it is, weekly chart. So let's clear a little bit. Resistance right here, support right there. You can put the same lines on your chart, guys. Okay, so rejection, rejection. The market moves sideways. The market doesn't go anywhere. If we go down to the 4-hour time frame, we will see that the price trades between this resistance and this area of support. Okay, what I want to see from next week, it's either the price to break under the support or above this resistance. Until this event happens, in this particular one, I'm not that interested to take. Why? The Bank of Canada, the BOC, will report interest rates. There are many calendars on the Google. You can go Forex Factory, you can go FX Street and find the calendars. They are free there. And if the Bank of Canada will drop the interest rates, they are expecting to, they predict to drop them by 20 basis points. It means the Canadian dollar, it's most likely it's going to get weakened. So the USD CAD, if the second one it's going to go down, it's going to force the other one to move upwards. So this market, it has to move upwards based on this event. Now, if this is going to happen around the support, we can definitely look for some long trades. But if the price is going to be here and this event will happen, then I will definitely wait for the price to break above the resistance, because it doesn't give that much room of opportunity. The resistance is here. And sometimes the breakout trades out of the range, they work pretty well, but most of the times they just bring frustration. So we can, and in trading, it's all, we are a profitable trader, a skillful trader always is happy to sacrifice the minority of the trades for the majority. Okay, doesn't matter if we're going to be in front of the screen, we're going to see that move. We just need to be patient, and we just need to understand why we don't take action and why we take action on the trades. Okay, guys? So let's go very fast over the other pairs, because we covered the majors and the Great British Pound against the Japanese yen. On the weekly chart, we see that the price is around the 200. Okay, it's already at resistance. Last week we said, yeah, we are cautiously, we're going to look for more push to the upside. On the 4-hour chart, to be honest, it wasn't that much. So I don't know if you guys took trades here. I didn't get involved with this one. But again, the price now, it's at resistance. All the indicators, they show negative divergences. If you are convinced and if you want to take long positions for any reason, wait for the price to break above the resistance. At some point, it's going to move lower and you can enter. Okay, don't rush to buy the resistance. And that's just from experience, trading experience. Okay, unless you want to buy the resistance, buy the resistance. And on the other hand, if the price will get rejected around here and it move lower and it create a low that is lower than this low here, then we have this lower high and lower low formation. Definitely we're going to look for short. From the price and technical point of view, we see this area here as an ultimate support. So we have plenty of time to go on the hourly time frame, on the 30-minute chart, find this formation, lower highs, lower lows, and we trade to the short side. Okay. Same with the euro and the Japanese yen on the weekly chart. We use also the weekly chart to find the strong levels of support and resistance. Now on the weekly chart here, that's the high, that's kind of the lows. We go down to the 4-hour time frame. Price is right at this resistance here. And we have to wait to see if it's going to move to the upside. If yes, then there is another resistance up here, you see on the left. If it's going to move to the downside, then definitely we're going to start looking again for short positions. Next one, let's check the S&P 500 or the US 500. Again, this is going to be one analysis I'm prepared to send next week. Actually, tonight I will send it outside. I use the moving averages here to put out the technical part. You can copy the levels that I have here. That's a 4-hour time frame. We have this low here with the bullish engulfing order block, this area, and we have a couple of bearish engulfing order blocks here. If the price is going to come in this area and get rejected, we're going to go short, definitely. But if it's going to come in this area and pass through, then we're going to look to go long. But I prefer to see rejections at these order blocks. Okay, so I'm more keen to go short rather than long on this one. So that's my bias for next week. Next one, US oil. It's a market that I personally trade pretty much every single day, the US oil, guys. And I primarily enter on the hourly and 30-minute time frames. Were very good trades last week. For example, one trade was short at the break here during the New York trading session. Another trade, it was this bearish engulfing order block I took over there. Another trade, it was on the 30-minute chart. Sorry, that's a 4-hour time frame. We were Wednesday, Friday, Monday. Yeah, it was this one. I got a losing trade here last week. From this point here, that was one losing trade, but the winners were good last week. Okay, maybe I will speak with the guys and maybe sending some kind of signals with this one here, who knows. So that was a trade, that was a losing trade, that was a winning trade, and that one was a winning trade here on the breakout to the downside after the price entered this bearish engulfing order block. But for next week, again, there is an order block area here, as you guys see. Now, I'm still looking for short positions because the market makes lower highs and lower lows. If the price will bounce, it's going to move upwards. At this point here, maybe I will get involved again. I don't know. I need to see the price action. But there is open OPEC meeting. I think it's tonight. So tomorrow we expect a lot of turbulence in the market. Okay. So next one, what's your opinion of German 40? The analysis will go out also on German 40 tonight, and the price on the hourly time frame, it found support here. It created this inverse head and shoulder patterns, if you know what is inverse head and shoulder patterns. And at this point, I'm looking for the price to retrace a little bit back and go long. Okay, the fact that there is the 200 period moving average here, it's not going to worry me a lot because that's on the hourly time frame. If that was the daily or the 4-hour chart, that would have been a different story. But I'm looking a little bit for more push to the upside. Okay, I believe the price can enter this bearish engulfing order block here. Vincent asks, hi, since your analysis is mostly weekly time frame or 4-hour time frame, does it mean we will hold the trade for 4 hours before closing a trade? I mean, when it depends. When I trade, I always, that's a great question. Thanks for asking that. When I trade, guys, I always do trading management, always. If I trade on the 30-minute chart, every 30 minutes, I monitor the candles and I decide how I'm going to move my stop loss. Okay, usually I set up a take profit target and I trail my stop loss. I set up the take profit target a little bit far away from the entry point. I don't go, this is going to be 3-to-1 or 2-to-1 or 1-to-1 because I want to leave my trade open to the market if the price is going to move to get me with a trade. Why? To limit where I can take profits. And this is something that I'm going to do webinar for, I think it's going to be a couple of months. They invited me to do a webinar for a prop firm that I'm going to exclusively explain how and why traders who take manual trades and they stick, like signal trading, it's a different story. When you are sitting in front of the screen and you are trading yourself there, okay, and you don't have one, like our traders, they said on the signals TP1, TP2, and TP3, which is a different story. When you are looking to go only with one take profit, you need to understand the pros and the cons, and you need to understand what you are really doing there. Okay, when you put TP1, TP2, TP3, TP4, TP5, whatever, it's like you are taking money out of the trade while the trade is going, which is a great thing. So you are allowing yourself to stretch out and move with the price if it's going to move, but also you secure profits, which is a great technique. On the other hand, by putting a take profit on the 3-to-1 only, let's say you enter, I think it's better if I show you on the chart. Do you guys have a couple of minutes extra to show you something on the chart? Let's say you believe that the price will start from here for ABC reason. This is going to be the entry point. You want to put a stop loss, let's say there, and you said, okay, I go for 2-to-1. Maybe after, this is 1 hour time frame, maybe the volatility will bring your trade in, let's say, 2 hours on 2-to-1, and then you see the price skyrocketing and keeps moving upwards. And then regardless that you are in a profit, you start blaming yourself. Oh my God, why I didn't stay in the trade a little bit more? I will have taken 5-1. And the next trade, you put the take profit on the 5-1, and it goes only on the 2-1. And then you are blaming yourself. Oh my God, if I have taken profit, I will have been so. And this is something that I see because I coach pretty much on a regular basis. I see that happens, and it's something that everybody has that thing. I used to have it before. It's normal. Okay, but we have to solve it. The only way to solve it is to understand in trading that the only thing you can control is how much money you're going to lose if the price move against you. But what you cannot control is how far the price will go at any given moment. So if the price is going to start moving upwards, and I'm long, I want to be in that trade, right? Do you guys agree? Do you guys understand what I explained here? In just generally speaking. Okay, let's check the NASDAQ. NASDAQ here, to be honest, I was shorting the NASDAQ all the way. I only took, most of the trades I took last week on the NASDAQ was good trades and winning trades, but I took a couple of losing trades. The one was here. With this one, I thought that was the end, and okay, but again, stop loss was there, entry was there, nothing harms. Bearish engulfing here, it was a no-brainer in a downtrend. So next week, what I'm expecting with this one is, if the price on Monday, of course, with this price action, I'm not going anywhere personally. But if the some kind of reversal price action occur, definitely I will go short. If the price is going to break above these highs here, I'm going to wait. It means it makes higher highs. I'm going to wait for a retracement somewhere, wherever it's going to occur, and I will look to trade with the trend. Okay. Any other question? Guys, from this, let's go very quickly through the euro crosses, pound crosses, and the rest I think in just 2-3 minutes, and we're gonna be done. Okay, so just stay on the line. So euro, Great British Pound. I will go through the weekly chart, okay, because we just need to find the good opportunities. This one here, it looks as a good opportunity. Why? Because there is a strong support. Weekly price action is a reversal price action here. It's a doji reversal at support. The MACD shows bullish divergence. The RSI shows also positive or bullish divergence. Now, we go on the 4-hour time frame, and if we find reversal price actions there, or the price makes higher highs and higher lows, we want to look to take some trades long. Okay, but if the price will break to the downside, then that's a different story. Okay, we make the plan now based on what we see now. Next one, Euro Swissy on the weekly time frame. Market is trending upwards, so merits higher highs and higher lows. It came at an area of support here. I want to see either a double bottom on the 4-hour time frame or I won't trade it at all this week and wait for a reversal here. If it's going to occur, if it's not going to occur, and the price will drop because the European Central Bank maybe drops the interest rates, then we won't just do anything. Or if you want to trade, you're going to start trading to the short side. Okay, you have your supports here. The next support is down there. Mark these levels on your chart, and you are very well equipped to trade. Next one, Euro Canadian dollar. Here, it's approaching an area of support. I don't know. I'm expecting a lot of weakness on the euro and a lot of weakness on the Canadian dollar. So I will just scratch this pair for now. Euro Kiwi, it comes to this area of support. I don't know what's going to happen at this point here. Euro Australian dollar, the moving averages are pointing downwards, which is good. Reversal price action here, not a strong reversal price action though. Okay, and yeah, if you tell me that's the only opportunity currency, that's the only currency pair you have to trade, how you're going to trade it, I will say short. But if I have the opportunity to stay away from that, maybe I will stay away from that. But what I like here is that the technical to go short with the fundamental weak euro, it aligns, it matches. So maybe it can be a good one. Now I think for a second time, I'll keep it on my chart. Okay. Next one, pound Australian dollar. Not sure what's going on here. Pound Canadian dollar, maybe it's going to go long this one because market makes higher highs and higher lows. The Bank of England is not reporting interest rates this week, so it might going to take advantage. If the Bank of Canada will report interest rates and it's going to weaken, maybe we're going to see this move to the upside. Okay. Next one, pound New Zealand, nothing here, very flat within the two moving averages. Australian dollar, Canadian dollar, we said we go short from last week. I hope you took the it was only one trade here on the 4-hour time frame and a couple on the hourly, but the most important thing, we knew the direction. If we are more positive, more we feel more comfortable on the direction, we just find the entry, we wait and we find the entry. From this point here, I'm not very sure what can happen. Australian dollar Kiwi, finally the price came like here and it stopped. Most likely I'm going to look for long positions. Mark this. Okay, put it on your watch list, please. You go on the 4-hour time frame. Market is consolidating here. The divergences are all more obvious now. So I believe a break to the upside and a continuation for this level, it's more probable. New Zealand Canadian dollar, I know many people, they were shorting this one. I'm not into this kind of trades because of this resistance. I think this week we're going to start looking more positive on this one, especially if the Canadian dollar get weakened by the Bank of Canada. And yeah, the rest, Australian dollar, Swissy, really, this one looks for more long, but I want to see a reversal price action on the weekly first. So I'm on the sidelines. New Zealand, Swissy, I like the fact that it's a bearish engulfing here, although it's in an uptrend. Bearish engulfing on the weekly can give us some good opportunities on the 1-hour time frame to go short until this area here. Okay. Guys, I think that's all from me today. We stretched it a little bit more. I hope that's okay with you. I have some questions here. Vincent asks, that's a nice question, interesting question. Which market time frame do you usually trade? London market, Asian market, New York time frame? I trade New York time frame because it aligns more with my schedule. In the morning, I'm more busy with market analysis. And if I have coachings, I prefer to put them in the morning. So to have the, and primarily I trade for 2 hours. I'm constantly on the screen for the trade setups. D asks, do you think there is a best time of day to trade? If you are trading different, for example, if you are trading Australian dollar, New Zealand dollar, yeah, the best time to trade is during the Asian session. But if you are trading, let's say, Euro US dollar, the best time to trade is New York session and London session. Okay. And of course, depends where do you live. So we first don't try to force your schedule in the market. We're going to put the market into your schedule. There is a way to move around. If you need some help, just send a message at Giles@support or find me on Telegram and I'm happy to help you with that. Just simple guidelines. It's nothing to worry about. Vincent says we are in different time zone. What is best time for people in Europe? I think for us for people who live in Europe, the time is, we are all, let's say, a couple of hours different. So, and personally, I trade New York trading session. So whatever it's your time zone according to the New York trading session. You are very welcome, Vincent. I hope I answered your question. All right, so guys, I think that's all from us today. Again, it was a privilege and honor to host this webinar for you. I hope you find value out of the webinar, and I hope at some point you start gaining confidence, and if you decide that trading also beside the signals our traders they send every week and every day, you can try to trade yourself. I'm here to support you if you need something. If not, I hope you take all the information we said on the webinar and you apply them. And yeah, I would like to wish to everyone to have a fantastic rest of the night, and enjoy as much hour left for Sunday. Have a great week, and I will see you all again next Sunday here with more market updates. Okay, thank you so much. Bye, everyone.